Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you must keep on your radar today. But first up, with an eye on the globe, let's get started with what has happened on the Federal Reserve front, which has delivered its third rate cut of the year of 25 basis points. But the decision exposed the deepest divisions within the central bank since 2019. Now, the vote split of 9-3, with two regional presidents opposing any cut and Governor Stephen Miran arguing for a sharper half-point move. Now, Chair Jerome Powell has called it a close call, emphasizing that the Fed is now firmly in wait-and-see mode and effectively ruling out any prospect of a rate hike over there. In a surprise liquidity signal, the Fed will restart Treasury purchases beginning with $40 billion tomorrow, and it also expects elevated buying for the next few months. Now, Powell also pinned much of the inflation overshoot on the administration's tariffs, calling them one-time price shock. For now, the Fed is signaling one rate cut in 2026. In fact, let's first up listen in to what Jerome Powell had to say.
The committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level.
And Federal Reserve Chair Jerome Powell says that he wants to hand over the reins with the economy on solid footing. Inflation heading back to 2% and a strong labor market firmly intact. His comments come as political pressure intensifies.
All right, let's also look at what Trump said after this Federal Reserve rate cut. Now, minutes after the latest quarter-point cut, he blasted the move as rather small and insisting the Fed could have at least doubled the reduction, and calling Powell a stiff. He confirmed that he will interview former Fed Governor Kevin Warsh and Kevin Hassett as contenders to replace Powell when his next term ends.
Growth doesn't mean inflation. They're always afraid that, oh, we have... And if there is inflation, that's okay, then we can slow it down. But we should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff. And, you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather, I would say, a rather small number that could have been double, at least double. And that's the other thing. I think the rates for the United States are always the lowest in the world, because without us, there is no world.
All right, so that's Trump on the latest Federal Reserve rate cut and more. But now let's also see how the Wall Street reacted to these developments. And U.S. stocks rather finished higher yesterday after a divided Federal Reserve delivered its third interest rate cut of the year and lowering the benchmark rate by 25 basis points to the 3.5% to 3.7% range. Now, the Fed ruled out the prospect of a rate hike going forward, while also signaling that future cuts may come at a slower pace. Now, Chair Jerome Powell said that the central bank is well positioned to wait and see how the economy evolves, noting that the tariff pressures under President Donald Trump have been contributing to inflation. Now, if you talk about indices, all of them closed in the green. The Dow gained nearly 497 points or more than 1%, while Russell 2000 that hit a record close, helped by optimism around lower borrowing costs that tend to benefit smaller companies more. If you talk about S&P 500, that also ended about 0.7% higher, whereas the tech-heavy Nasdaq index that gained more than 0.4% on Wall Street overnight. Remember, however, sentiment did cool off a little bit in after hours of trading. Oracle shares, they tumbled about 11% after reporting weaker than expected quarterly revenue and also raising its spending outlook, reigniting debate about how quickly tech firms can earn returns on their heavy AI investment. Other names slipped as well. Nvidia fell about 1% and CoreWeave dropped more than 3%. Now, looking ahead, some strategists are urging caution. Now, with the Fed taking a wait-and-see approach and economic signals remaining mixed, markets could face some pockets of volatility. In fact, analysts have also warned that expectations for rapid or aggressive rate reductions may need to be tempered as the path forward becomes less clear. So yes, pretty good day on the US markets. But Srishti, how are things on the crude front?
Quite interesting because there too we are seeing a bit of a move coming in on crude as well as gold oil prices. Let's start with crude. As crude rises after US seizes Venezuela's tanker and oil prices did rebound from the early losses. WTI crude futures is rising more than 1%. Even Brent oil is up almost 1% as we speak right now. So definitely good moves coming in on the crude oil prices, but the move in the silver is definitely not stopping. It has once again hit a record high level, is trading above that $61 per ounce mark. But do remember that gold silver parity is still something that the analysts are looking forward to. But nonetheless, it's gold that as well is seeing a good up move. It's almost up 1% as we speak right now.
All right, so very positive moves in gold as well. But let's get you what else is happening in the US. Now, Trump has launched his long-promised Gold Card program, a fast-track US residency scheme that's priced at $1 million per person and $2 million per foreign employee or corporation. Now, positioned as a more powerful version of the green card, the program replaces EB-5 visas and directs all funds to the US Treasury, and Trump predicting billions in inflows over there. Now, the plan drops job creation requirements and caps that's aiming to help companies retain top foreign graduates, even as the administration continues aggressive immigration crackdowns. Let's listen into Trump's comment on this gold card.
Funds go to the United States government. Could be a tremendous amount of money. It'll also be able to have people like this keep, as an example, just one example. There are a lot of examples, people just buying them. It's somewhat like a green card, but with big advantages over a green card. And companies are going to be able to go to the Wharton School of Finance, the Stern Business School, Harvard, MIT, wherever you may get your students, any school, and you're able to buy a card and keep that person in the United States, actually. So there's certainty, because I've heard from Tim Cook of Apple, and I've heard from a lot of people, some of the people at this table, that essentially in the United States you can't keep the student. You can't hire people from the best colleges because you don't know whether or not you can keep the person.
All right, but moving on to the IT major Oracle, because the shares of Oracle has actually plunged 11% after the revenue mixed expectations, dragging AI names like Nvidia and CoreWeave lower. And despite beating on the earnings and landing massive AI commitments, including contracts from Meta, Nvidia, and a $300 billion of multi-year deal with OpenAI, investors are spooked by ballooning capex and mounting. Now, Oracle now expects $50 billion in annual capex, far above the earlier estimates, and posted a $10 billion of negative free cash flow this particular quarter.
All right, so that's about some earnings in the US, but let's move on and get you the latest on India-US trade talks. Now, Commerce Minister Piyush Goyal sounded optimistic about India-US trade deal and said that both sides are moving towards a free trade agreement and that both countries are committed to early conclusion of the India-US FTA. In the latest, Commerce Secretary Rajesh Agarwal met US Deputy Trade Representative Rick Switzer, and ongoing negotiations for a mutually beneficial BTA were discussed. Here's what Commerce Minister Piyush Goyal said after that.
United States of America की टीम मंगलवार से भारत में है और उनके साथ बातचीत निरंतर प्रगति कर रही है। बायलैटरल ट्रेड एग्रीमेंट की तरफ हम आगे बढ़ रहे हैं। इसी प्रकार से
Well, let's track what is happening on the trade deal front as India and US hold talks in Delhi. Now, the US Trade Representative Jamieson Greer highlighted in a Senate briefing that India has given the best offer yet amid the ongoing trade talks. My colleague Sumita joins in with all the details.
That's right. India and the United States have stepped up trade talks as Deputy USTR Rick Switzer and his team held talks with Commerce Secretary of India Rajesh Agarwal. In fact, both the sides they exchanged views on economic ties and, of course, took stock of trade negotiations. Now, Switzer also met with India's Foreign Secretary Vikram Misri, and their discussions they covered tech partnership, trade, and resilient supply chains. In fact, as far as this visit is concerned, the MEA, remember a couple of days back, it termed this visit as a familiarization visit. In fact, the Commerce Ministry as well, sources within the Commerce Ministry also stated that this is not a formal round of talks. Engagement, however, is active on both the sides to conclude a multi-sectoral BTA, but both the sides are yet to reach a landing ground on average tariff rates. There are talks that are currently on multiple tranches. There is focus, however, on a package which could address concerns of both the sides. This package is going to address oil and reciprocal tariffs from India's side and, of course, how the United States can get access to the Indian market. That could probably also be looked at via this package. The United States, like I stated, is looking for more balance in trade to avert future black swan moments. It is looking for market access in terms of tariffs, sectoral non-tariff barriers as well. Remember this, even as India is facing elevated tariffs and, of course, exports to the United States by India, they fell nearly 9% year on year in October 2025 as compared to October 2024. Now, we have to also bear in mind the comments that have come in from U.S. Trade Representative Jamieson Greer at a Senate Appropriations Committee. In fact, he stated that New Delhi has made the best offer we've received as a country. However, it's been a historically difficult market to crack, and that the ongoing negotiations are aimed at expanding market access for American farm product. However, there is some resistance in India to certain crops. However, he stated that India's proposals have been quite forward-leaning and that it's a viable alternative market for U.S. commodities. So it remains to be seen how much of an access is the Indian side going to give, given the fact that there is a lot of keenness on the side of the United States to gain market access, particularly in the sphere of commodities.
All right, thanks, Amita, for that. But we also spoke with a couple of experts to understand what they are really making of U.S. representatives' visit to India and the latest on India-U.S. trade talks. Let's take a look.
The problem we have continued to face with negotiations with the United States is that what we come to agreement with the negotiators on the ground, President Trump then comes in and says, oh, that's fine, but I want to add one or two personal things. So what's happened right now is for the fifth version of the agreement has gone upstairs to the president, and he is now sitting on it. That's why the present USTR team has basically come in to tweak a few points here and there. But they're basically saying that, look, we're actually done for the most part. I mean, at least for goods and farm products, not for financial and digital services, which is tranche 2. But the president has to make a call.
All right, moving on to another story then. And global tech giant Amazon is all set to expand their operations in India. ET Now's Charu Singh spoke to Dharmesh Mehta, who's the VP of Global Selling Partner Services, Amazon. Dharmesh Mehta revealed that they will be investing $35 billion in India in the next 5 years. Listen in.
As you noted, we have just made this $35 billion commitment over the next 5 years, and it is a huge investment because we see India as such an amazing opportunity. This investment spans a lot of different areas. You know, obviously we employ a lot of people here in Amazon, and it's a compensation for those employees. It is infrastructure we're building, fulfillment centers, micro-fulfillment centers, and there's all these different capabilities, and the investment kind of spans across all of them.
And so, a question connected to this only, you are also planning on data centers, expansion of that footprint as well in the Indian market. How do you think that is going to help the Indian workforce and also your sellers that are present in the domestic market currently?
Absolutely. Part of that investment's in data centers, and part of that is really to support the growing usage of AI, and in particular generative AI. And that's something that's going to be important for consumers and shoppers. It's going to be very important for small businesses as well. And so as part of our commitments, by 2030, we've also said that we will help AI enable over 15 million small businesses. And one of the ways we do that is small businesses that sell in our store. And there's so many powerful tools we're providing using generative AI to make it easier, to make it lower cost, and to help sellers grow even faster.
Also, looking at the millions of jobs that you are planning on adding to the Indian ecosystem, which areas those jobs are going to be focused at?
Yeah, so part of our commitments in 2020, we said that we would create 2 million jobs by 2025. And actually last year, we had 2.8 million direct and indirect jobs that we've created here in India. And we've now signed up and said that by 2030, we'll get to 3.8 million, or 1 million incremental jobs. Those are direct jobs. Those are jobs that are working in our fulfillment centers. They're the associates that help take care of a bunch of products. They are employees in our corporate offices who are writing software or machine learning scientists. They are support associates and customer service agents. And so there's a wide range of different types of jobs that we're creating.
All right, so that's all about our exclusive interaction with Amazon. But let's now take a look at what's happening with Apple. Now, a second Apple store in Mumbai is coming soon, and that's the exclusive word coming in from Apple Vice President of Retail Stores, Wendy Beckman. Now, talking to ET Now's Sumita Karir, she says that India is an important market for Apple and that the tech giant is seeing strong sales in India so far. Listen in to an excerpt of this exclusive conversation.
India is super important to us, just in general, so you know that. And we have 5 other stores. I think Noida is a really dynamic hub. It's got a really vibrant student community. It's got entrepreneurs and creators. And it just feels right for Apple and the community that we can serve.
Right. So let me expand a bit more on the fact that you mentioned that, you're looking at servicing this community, you're looking at attracting this community of creators. Could you expand a bit more on the kind of audiences besides that you expect to attract to the store?
We create products and services that serve everyone. So I think, it's not just one audience. I think we have the opportunity to, have users use our products for everything they do. So I think it's for everyone.
So you have, of course, presence in Bengaluru, you have presence in Mumbai, you have presence in Delhi, and now Noida. What is it that we can expect next from Apple in terms of your retail strategy, in terms of your retail presence? Because as it is, Apple is betting quite big on the India market.
Let me think about that. So it's good. I mean, we're so grateful that the growth we've had. You mentioned all the stores in the cities that we've been in already. So we're just grateful with our customers and our customers' connections and our continued growth. I think we've already announced our second store in Mumbai, so that's exciting and more to come.
Right.
All right, so that was the comment coming in from Apple's India VP. But moving on to another story, and artificial intelligence has been all the rage in the space of IT. But how is India gearing up amid the global AI race? And why are global tech giants making a beeline to India? ET Now's Raghav brings us the details. Raghav.
Absolutely. I believe it's good news for all the AI industry in India, as top tech AI giants are pledging AI investment inside of India, with Amazon pledging 35 billion, Microsoft pledging 17.5 billion, and Google pledging about 15 billion. Speaking about Amazon first, the news came in that Amazon has pledged about 35 billion over a time frame of 5 years up to by 2030. The impacts of this on India's AI industry will be as follows. Investment will flow to the quick commerce industry and cloud computing industry. AI-led logistic infrastructure will be developed in India, and 10 lakh job outlay is being planned until 2030. Speaking about Microsoft, which gave in an announcement, it pledged 17.5 billion over a time frame of 4 years from till 2029. Speaking about the impact, is going to be the investment will be in Microsoft's cloud computing and AI computing data centers. The infrastructure will be invested by Microsoft. Expansion will also be over the existing 22,000 employee pool that Microsoft has today. Diversification will be beyond the ops that exist inside of Bangalore, Pune, Hyderabad, Gurgaon, Noida. Speaking about Google's investment of AI into India, which came in October, they have pledged $15 billion of investment inside of India's AI infrastructure, largely over a time frame of 5 years till 2030. Speaking about the impact it will have, they're going to establish large-scale AI hubs in Visakhapatnam, biggest investment out of the United States coming in inside of India. Investment will also be in the gigawatt scale data center campus in India. 1 lakh job outlay is expected out of this investment from Google. Speaking about the domestic investments that have happened at the moment, seeking insight in India's economy, Tata Electronics have secured a deal with Intel as the prospects for buying chips up to 14 billion, which is a big announcement at the moment for a nascent industry of AI in India. IT giants Cognizant CEO Ravi Kumar has expressed commitments to India's AI-first initiative, something which is like we are looking forward to. Government of India has also last year launched the 10,000 crores India AI mission. In the upcoming budget, we'll also be expecting more to come from the government. Hence, it's a lot of exciting announcements coming out of the AI sector in India.
All right, so that's all about investments in India's AI sector. But let's move on and what's happening, what else is happening. I'll tell you that. Now, in the new age of AI, Satya Nadella lays out a bold vision at the intersection of technology and policy, from scaling AI responsibly to driving nationwide transformation. Now, he also adds that by 2030, India will have the world's largest developer community. Let's listen into his comments.
The tooling, when it comes to what developers are using, we're very excited about sort of what's happening with GitHub, right? When I look at GitHub, and in particular in India, I think India is projected now by 2030 to have the largest developer community in the world. 57.5 million by 2030, and that's going to be the largest developer community. And it's just fantastic to see that human capital and the potential of that human capital being applied to societal scale problems and in terms of building these agentic systems.
Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. And it's time now to take a look at how the Asia-Pacific markets have opened up. And it's a rather positive day coming in for most of the Asian markets as well. This on the back of the positive cues that we are tracking from Wall Street after that third rate cut for the year. Let's see how Hong Kong's Hang Seng Index is doing. Absolutely positive cues over there. 0.7% gains. 25,700 is the level that the index is holding. However, on Shanghai, China's Shanghai Index, that's absolutely flat right now. Shading, however, in the tinge of red. 3,897 is the level that it's holding on to. Nikkei as well, minor negative moves over there. 0.1% downtick. 50,530 is the level that it has managed to hold on to. So yes, those are some of the key indices. Now, if you talk about ASX 200, Australia's index, that's actually trading pretty much in the green territory. 0.6% uptick over there. 8,630 is the level that it has managed to hold on to. Other than South Korea's Kospi Index, that's also managing to hold on to the green. 0.7% uptick there. 4,165 is the level that South Korea's Kospi Index is trading at. So yes, pretty good moves on the Asia Pacific front as well, though minor negative moves on Shanghai Index as well as Japan's Nikkei. So yes, that's about the Asia-Pacific front. But now, if we talk about Nifty, we yesterday gave up the 25,800 level as well. So yes, it's a third day of down trend that we are witnessing on the Nifty. However, today we are expecting a very positive start. A gap up start is what the Nifty implied open is suggesting. Nearly 100 points of uptick at start is what the Nifty implied has suggested. So yes, a very positive day is what we are penciling in as of now, tracking those positive global cues.
All right, so that's a bit of a positive handover coming in from the global markets. But let's also tell you which are the stocks that are going to be in focus today on the back of the news flow. And firstly, let me take it across to Ishika, who's standing by with a list of stocks to be washed out today. Over to you, Ishika.
Definitely. So there have been some stocks in spotlight. One of them has been Adani Enterprises, starting with a big fundraising win. So it has its 25,000 crore rights issue closed with 108% oversubscription. A good win for Adani Enterprises. Next, we also have Adani Green Energy in spotlight. Now, in the renewable space, it has sold its 1.74% stake at rupees 970 per share, and buyers such as Quantum Mutual Fund, BNP Paribas, as well as Edelweiss Mutual Fund have stepped in. Next, we have Mazagon Dock turning in to defense manufacturing. The Brazilian Navy and Indian Navy, along with Mazagon Dock, have signed a strategic MOU for maintenance of Scorpion-class submarines and other military vessels. We also have Tata Steel in focus. Now, in metals, there's been a major capacity push, and Tata Steel's board has approved the acquisition of 50% stake in Triveni Pellets for 636 crores. We also have DCM Shri Ram and Bayer Crop Science have signed a strategic MOU again to advance sustainable, advanced, future-ready agriculture. We also have Puravankara in news. Now, in terms of the real estate developments, Puravankara's arm has secured a 509.5 crore order for the construction of Varnam Phase 1 at the One Bangalore luxury project. Last but not the least, we have Lemon Tree Hotels. They have reportedly signed 2 new properties in Chhattisgarh as well as Andhra Pradesh. Back to you.
All right, thanks Ishika for that update. Lots of stocks to track today, but that's not all. We have several other stocks that we will be watching out for, and Rabinder is here with that second list.
Well, as Ashoka, Buildcon can be in focus, where companies along with its joint venture has got a LOA worth rupees 1816 crore from BMC Mithi River Development and Pollution Control Project. Lloyd Metals and Energy can be in focus in today's trading sessions where Lloyd Metal and Tata Steel has entered into a non-binding MOU for examining potential areas of cooperation in areas such as raw materials, mining, logistic, pallets and steel making. And apart from this, board has also approved acquisition of 50% equity stake in Nexus Holdco for up to $55 million. KI Industry can be in focus, where company has started first phase of commercial production of LT and HT cables at its greenfield unit located at Sanand in Gujarat, and the additional capacity will help the companies to cater the increased demand. Petronet LNG can be in focus, where company has signed a long-term agreement to borrow secured rupee term loan of rupees 6,000 crore each, aggregating to rupees 12,000 crore from the consortium of SBI and Bank of Baroda. And lastly, on the on the back of tax order, LIC can be in, the company has received demand order from the GST worth of rupees 2,370 crore. So back of this, LIC can be in focus.
And Kia Motors has launched second-generation Kia Seltos at the mega event in Hyderabad with a sharper exterior, revamped cabin, dual-screen setup and refined powertrain updates. 2026 Kia Seltos promises to be a game-changer in auto innovation. One of the headline upgrades for the new Seltos is the introduction of a full-strong hybrid setup. The bookings now open. The deliveries are expected in mid-January. MD and CEO Kwangru Lee, while introducing the next-gen car, that they are hoping to revolutionize the SUV market further. Here's a glimpse into the big launch.
Out of this story stands the Seltos, a true symbol of Kia's pioneering spirit and our deep bond with India. When we began our journey in India, the mid-SUV segment showed great promise, but its true potential was yet to be unlocked. We recognized the untapped opportunity in the mid-SUV segment early on, not just to participate, but to define the category by positioning ourselves our leading player. With pride in understanding the evolving aspiration of Indian customers and turning that understanding into opportunity for leadership. By listening closely to what Indian customers truly wanted, their needs, daily rhythms, and aspirations, we translate those insights into a clear plan. Rather than following conventions, we aimed to shape what this category could become, broad in appeal, and rich in what customers expect from their vehicles. More innovative features, stronger designs, and great choice. This bold thinking led to the creation of the Kia Seltos, our first product designed specifically for India and tailored for a new generation of confident, forward-looking Indians. In the past 5 years, the medium SUV segment has doubled in size, and now represents nearly 30% of all SUV sales in India. More than 580,000 Seltos vehicles proudly navigate Indian roads, highlighting that when we prioritize customer needs in our designs, the market responds positively. The Seltos truly become a badass, bold, confident, and original. As the segment continues to evolve, Kia remains committed to raising the bar.
Tech-forward heritage of the first generation, this new model takes a significant leap forward with the next generation ADAS, intelligent connectivity, and enhanced safety. It's not only respond, but also anticipate your needs. It protects, adapts, and thinks ahead, because true confidence means being ready for anything.
All right, so that's all about the new next-gen Kia Seltos. But with that, time now to slip into a word. Hi there, welcome back to Nifty. Now you're watching Market Cafe, and it's time now to take you through some more updates that we have coming in. And Adani Enterprises' 25,000 crore rights issue is oversubscribed by 108%, with the public portion also being oversubscribed by 130%. Now, additionally, promoters are fully subscribed to their entitlement. My colleague Ankur Mishra is here to take us through all of the details.
Yes, Adani Enterprises 25,000 crore rights issue has seen oversubscription. If you talk about the data which has come in for till 5 p.m. On Wednesday, 108% oversubscription has been there. The shares which were on offer were 13.85 crore, and the bids has come in close to 15 crore shares. And if you talk about overall holding, which is 74% promoter holding is there. Therefore, it is interesting to know about the public subscription as well. 3.6 crore shares were on offer, whereas the bids has come in for 4.7 crore, and therefore around 130% over subscription there for the public portion as well. There was a payment structure which was decided earlier. 900 per share was the price which was supposed to be given at the time of application, and rest payment can be made in January as well as a March of 450 rupees each, and the proceeds of the rights issue will be used for debt reduction, capital expenditure, as well as repayment of shareholder loans. And if you talk about the pricing, of course, it was a discount to the current market price, and it was priced at 1,800 per share.
All right, thank you so much, Ankur, for getting us all those details. But on the sidelines of Pravasi Rajasthan Divas in Jaipur, my colleague Anurag Shah caught up with Anand Rathi, the chairman of the Anand Rathi Group, to understand his take on India growth story, the IPO boom, and how to scale it. Let's listen in to an excerpt of that conversation.
In spite of trade deal not happening, in spite of rupee falling down, in spite of any other problems which are facing, the GDP has grown by 8%. Suppose if these problems were not there, GDP would have grown even more. My belief is India is capable of growing 10% or more, but at least 7 to 8% growth will come for next at least 10 years. We are in the cycle of growth. Our infrastructure cycle is there today, and therefore I think it may vary quarter to quarter, year to year, but again, if you take a view for next 5-10 years, the country has to grow by 7-8% minimum.
And sir, in a short term, according to you, what are the challenges for economy in a short term for a 1 year horizon?
You see, challenges obviously, as you said, tariff. There is so much of uncertainty. Not that to my mind, tariff, whatever tariffs come, the business will adjust. At one time, when there were huge import duties, when they were reduced, people said, oh, what will happen to local industry? They will shut down. But it didn't happen. They improved. So my belief is that Indian entrepreneurs are very capable. If a challenge comes, they'll meet it. You have seen already, in spite of our exports going down to US drastically, overall exports are not going down. Okay. So Indian industries, entrepreneurs have found other markets. So I think our contribution in the international market is so low that some small problem will have short-term impact, but in long term, I'm sure we'll be able to find better means and solve the problem.
All right, so that's the latest coming from the Anand Rathi Group chairman. But moving on, newly listed player PhysicsWallah aims to open 75 new physical tech-enabled learning centers across India. And he also sees a huge growth runway for the company. My colleague Anurag Shah caught up with the co-founder Prateek Maheshwari to understand what the future plans of the company are. Let's listen in.
As we told in our earning calls as well, so we are opening 75 new physical learning centers, digital learning centers. Apart from this, we are going deeper in existing exam categories, because if you see, India has 25 crore students, but we are teaching not even 2% of this learner base as a paid student. So we are barely scratching the surface and a way to go ahead from here.
Okay. So how you are balancing technology with the growth, because with the expansion, you will have to fund the centers also.
So what we have created is tech-enabled offline learning centers, which is very unique business model. These are phygital learning centers, and technology is center of everything what we do. Still, 93% of the learner base we are teaching in online mode of learning. And online mode of learning is a very powerful mode of learning where you can impart world-class education at a fraction of cost. For example, our average course fee is 4,000 rupees for entire year. It is less than a 10 rupee per day. It's less than a cup of a chai in India. So that allows us to go to deeper in the market, and we can organize the entire unorganized market of education in India.
And my final question, Prateek, for the year 2026, because we will be entering into year 2026, what kind of revenue targets you have in your mind for the company?
So we have shown very strong growth in terms of last year to this year, both bottom line improvement and top line improvement. And we continue to grow more than 20% in terms of revenue for next years.
All right, welcome back to ET Now. You're watching Market Cafe, and it's time now to put the spotlight on Indian IT players, which are remaining in focus as Citi stays cautious across the sector. Now, it maintains a sell call on Wipro with a neutral on Infosys and a sell call on Tech Mahindra as well. AI seems to be a key focus area for most tech majors. And why is that? Ishika is here with all of those notes.
Definitely. So let's break down what Citi has to say about Indian IT companies such as Tech Mahindra, Infosys and Wipro. Starting with Tech Mahindra, Citi has maintained sell on it with a target price of 1,290 rupees. It says that demand is mixed, telecom vertical is stabilizing, but BFSI and auto verticals are weak, and aerospace and industrials are also improving. Furthermore, it says that AI investments continue with a margin climb targeted towards 15% by FY27. Moving on to Infosys. Now, here's what Citi has to say about it. Citi is neutral on it with a target price of 1,525, and it says that demand will remain stable throughout FY26, but furthermore, manufacturing vertical has outperformed but expects H2 to be soft on account of seasonality. Furthermore, it says that its discretionary spending demand is also steady, and accounts key catalysts such as macro easing, client-specific shifts and AI adoption. Next up, we have Wipro. Now, here's what Citi is saying. Citi is maintaining a sell on Wipro with a target price of 220 rupees and says that BFSI and healthcare show good momentum, whereas telecom is a little mixed and manufacturing is actually weak here. Now, however, Wipro is still pushing cost takeouts and vendor consolidation. So overall, Citi is cautious on Tech Mahindra and Wipro, but is still neutral on Infosys, with AI, macro and cost discipline driving the next phase in the sector. Back to you.
All right, so that's about the IT space. But with this, let's also put the spotlight on Indigo, as the company has now gone ahead and cut its Q3 guidance because of the operational disruptions. The company had to cancel almost 4,500 flights in the first week of December. That is all we all know about. And along with that, there has been a 10% reduction in the winter schedule flights that has been ordered by DGCA. All of this is expected to impact the financials of not just in the Q3, 3, but quarter 4 and a full year of FY26 will get impacted is what Indigo has said, while they'll come with their Q4 as well as FY26 guidance in a while. But with respect to quarter 3 guidance, the company does say that this time around they're going to be cutting their capacity in terms of the percentage change, where earlier it was guided to grow in the high teens growth in ASKs. Now it has been revised lower to high single to early double-digit growth in ASKs. So that's one part. But the other growth criteria is passenger unit revenues in terms of the percentage change. Earlier it was expected to be flattish to slight growth. That was the kind of growth that the company was envisaging. But now mid-single digit growth, downward moderation is what the company is penciling in. So that's about the quarter 3 impact that Indigo is looking forward to, and they have gone ahead and cut their guidance when it comes to the quarter 3 performance, but going ahead it will impact the full year performance as well. But with this, let's also listen in to what Indigo chairman Vikram Singh Mehta had to say.
Let me also express my gratitude to government and the regulators for their cooperation and support. I assure them we remain committed to continuous improvement. Last week's events are a blemish on this airline's pristine, clean record. Our company has erred. There is no denying this. It has now to build back your trust. This will not be easy. It will depend on actions, not words. It will be a journey. And as a first step in this journey, let me say, as chairman of the board, the company apologizes without conditions or excuses.
All right, so that's all about Indigo. But with that, we're completely timed out on this edition of Market Cafe. Srishti and I will take your leave, but don't go anywhere. The market will take all the action forward.